Hey everybody, coming at you today with a video for the investor series. Basically, we've got more than four, several very, very large important companies reporting earnings this week. At the time of this recording for this video, this is the last week of October. And the companies that we have reporting earnings are Amazon, Apple, Google, Facebook, Twitter, and Shopify. So these are all really big companies that have actually had, they're like the tech bellwethers right now, right? And they've all pretty much had a very, very significant run up in the last, since really COVID started in March. Okay, so remember, in this video or in this email, the link below, you can, you can go ahead and click the link and you can start earning money from your social media profile in it with as little as 90 minutes of training. Also below, there's going to be a link and you can buy my new credit Online Income and Investing and Financial Independence Blueprint. It's only $7, everybody. You can buy that for $7, and you'll see it in the link below. Okay, so let's go ahead and dive in here. So as you can see behind me, what this is my M1 Finance Investor Pie. So what you can do is, with respect to M1 Finance, you can go on there, and if you're new to investing, or even if you're good, you could start investing by buying indexes. The two indexes I have are VOO, symbol VOO, and also VOOG, symbol VOOG. If you want to start taking some positions, you can just, like I said, you can invest in my investor pie, or there's also other very well-known hedge funds out there that have investor pies on M1 Finance. So to kind of dig into my philosophy a little bit here, over the weekend, actually, I tore into some of the financials, of these companies that are reporting, a few other companies as well. But I tore into the financials of these companies that are reporting. And what I do is I come up with a ratio, right? So my philosophy is really gross profits. I really feel that gross profits are the lifeblood, of a business. And that excludes, financial kind of management companies like a Berkshire Hathaway or a BlackRock. But I do feel that gross profits are the lifeblood. So what I'll do is I'll go in and take a look at the most recent, yearly earnings and then the yearly gross profits. I'll take a look at their current market capitalization, and I'll divide those gross profits into that and come up with a ratio. So what that does is, when I'm analyzing all the different growth stocks, I can figure out which companies to increase my exposure to. So let's go ahead and take a look real quick. So in here, basically here we have Amazon, Apple, Google, Facebook, Twitter, and Shopify. If you take a look at some of their multiples, unfortunately, it's not on one page. Sorry about that. But I was actually pleasantly surprised and pleased, actually, that both Google and Facebook have rather, low multiples compared to the group. Google at a 12 multiple, Facebook at a 14, and then you go down. Twitter still, I don't know. I'm not really sure if I'm going to be taking a position in Twitter, but from a growth stock valuation perspective, it's pretty attractive. If you take a look at Shopify, Shopify is a company that I'm interested in keeping my position and potentially increasing my exposure. Problem is their multiple is 144. That means that their gross profits divided into their market capitalization is 10 times what Facebook is right now. So what that tells me is that Facebook, at least for me, is a little bit of a better place to maybe give myself some more exposure. If you take a look back when one thing I want to kind of remind you all is that I started taking possessions in Netflix in 2011, and as I increased my exposure to Netflix, their multiple was way low, something like 2, right? So their gross profits, their market cap was 2. Now it's a lot higher. But in any case, I did this over the weekend, and we've got all those. So all these companies are reporting on October 29th, which is Thursday, and pretty much all of them are reporting after the bell. So what I found more often than not, everybody, is that when they report, there's something called buy on the rumor, sell on the news. So a lot of times, more often than not, these stocks are going to probably fall, when they report. So if you have any questions, go ahead and put some comments below, or email me, John, john@quickapply.com, or john@myprofileprofitmachine.com. And best of luck to you and continued success. Thank you.